Bang.
Mongo like this.
Welcome back, folks. There's our intellectual property rights.
That's right. There we go.
Since people read those things so carefully.
Oh, yeah. Ain't that the truth?
But you're welcome back, folks, to the Rebel Edge. We're going to have to figure out how many of these we've done so far, Pete, because we used to do 3 a week. Now we're doing 4 a week. Yeah. And we got to be coming up on, I don't know, a high number episode. So we got to start, we got to put an intern on that, going back on all of them and figuring out how many.
I'll have to get an intern.
That is the voice of Jared.
Well, as always, this is nearly a macro-free zone, folks. So if you want a lot of macro, there are a whole bunch of places you can go, and there's a big reason why those places don't get near the audience that shows like this get, because people actually care about trades, not just hearing how big Chairman Powell's shoes are or how tight his shirt might be.
How's the briefcase, as they used to do?
Exactly. So we're going to give you 1 minute of macro. Starter up, Jared. I'm going to give you, Pete, the crude oil getting spanked yet again. Monday, just 2 days ago, folks, this was $82 for crude oil. And it has been getting cracked. Today it broke down hard and then made a bit of a rebound. One of the reasons it was breaking down hard was indeed a hedge fund was rumored to be being liquidated. So because of that, it traded down to, I think, 71.80 and then bounced back up to 74 after people got the idea that it really wasn't OPEC. It was likely just somebody liquidating a hedge fund that really screwed up.
And that makes sense, John, because quite honestly, that's an incredible move that you just wonder. And there's really no major headline. And so that certainly at least gives us a reason for why we're seeing that continued drop, but how rapid that drop's been as well. I think, at some point, John, I think we're going to see some sort of a bounce, but they certainly have had the pressure on it. And we've got our guy, Brian Sullivan, on this whole thing. He's been reporting on oil forever, and he probably knows it as good as anybody. Maybe we'll have to have him come on as a guest at some point in time or something to discuss what's going on in crude.
Yeah, that would be a good idea, Pete. For that longer discussion, we'll definitely do that. Yeah. All right, folks, we're going to kick it off with Carvana. Mm-hmm. You know these guys. They're the vending machine of used cars. Sounds like a wacky concept. It worked for a while until it didn't. And now, just like Pete and I have been saying, they have a real issue with their burn rate. Unlike a biotech, car companies normally don't face this kind of problem, Pete. But in this case, these guys do. And they have a lot of debts coming due. And a lot of the people that hold that debt say, we're going to give them a little more rope to hang themselves. But it's some of the biggest funds on Wall Street hold some of that paper or bonds. And they're not happy about it. And that's why the stock's down hard.
And John, there's a real reason why, you and I talk about this all the time from a fundamental perspective. We're talking about a company that has $8 billion in debt. That's a huge number. You can understand why things are starting to shake a little bit. And oh, by the way, what a wonderful downgrade today after the move by Wedbush. I mean, that's freaking phenomenal. That's how you help people, is you downgrade after this massive move to the downside. What they should have done is looked at that $8 billion in debt, looked at that free cash flow burn of $1.6 billion and said, you know what? This is not adding up. This isn't working. They didn't do that. There is a monster short in here, John, as well. So when you combine all of that, about a 39% short interest, by the way, just to give you a little idea. And one of the reasons why I think that's really interesting is yesterday we had call buying that expires Friday at the 7 strike ahead of this news now today. What were they doing? You'd say, well, Pete, if they're buying calls, they obviously think it's going up, except for the fact that maybe, and this is something we discussed yesterday with the guys, what about the idea of hedging, shorting the stock and buying a 30-cent option to the upside to give yourself a little bit of that protection, John? Just like a put can protect you to the downside when you're long, This call can protect you to the upside when you're short. And I think that's a big part of what's going on today.
Yep, I agree. And you'll hear me say that a lot, folks, because I do agree with Pete. Most of his observations are correct, except occasionally when he argues with me about who's the most handsome brother. Let's take a look at XPEV. This is Chinese EVs. They've been hot for a little, but Pete, they reported earnings that were down. They basically said monthly deliveries, and get this, this isn't Tesla. We all understand that. They don't have near the profit margin, but 5,800 vehicles were delivered in November. That was down 63%, Pete, year over year. Is it any wonder the stock's getting clocked today?
Yeah, it makes sense, John. And if you even go back to last week and look at those earnings, I mean, they reported a bigger loss than expected. That wasn't good. They had a tough time in November. I mean, it was down 63% year over year, November, as far as deliveries. But the total for the year, they've actually done okay. They're up about 30%. So there's some positives there, but I think a lot more negatives, John. There's a lot to be said about this. And I actually just point right to, hey, look, they disappointed last week. They're going to have to prove to us that they can make those deliveries the way they need to, quarter after quarter, month after month, and show us and prove to us that they can do that. That's been a problem. Again, when we talk Chinese names, John, I can't emphasize enough, you can only trade them with options. You don't want to be in those stocks, and there's a myriad of reasons why, but I think you want to be in the options world where you know what your risk reward is, and you understand the tolerance. Also, you understand how much more you can take out of it from the option perspective. Time is the one issue. That is the one issue, the timing of that. But you don't want to be in these stocks, in my opinion.
Yeah. And just as you say, I'm looking, Pete, at establishing a position because with China reopening, of course, when they were locked down and nobody could go out, or at least an awful lot of the country that was earning money rather than living as farmers and so forth, when the people earning the money can't go out and spend it, you're not going to see companies that rely on that audience doing very well. I think they will do better now that China's unlocking. So I would be looking to put on an upside call spread, probably between the 10 strike and the 15 strike, or just buying out of the money 12 or 15 call out there into the future. But just as you say, I don't really like owning Chinese equities because of what Xi Jinping and the Chinese Communist Party, CCP, have done in the past. When they don't like somebody, they just slam them. And that's why I'd rather be in the options as well. Yeah. All right, let's take a look at one of Pete's blazing saddle picks for the day. That would be MongoDB. Because, of course, Alex Karras, God bless him, Pete, is basically the star of the movie Blazing Saddles as Mongo. And I loved him in the role, but the stock, MongoDB, down 74% of its value since late last year. Investors are trying to decide whether this one should be on the holiday wish list piece. Is it on your wish list?
Well, John, when you raise the forecast, that's always a good thing, right? The stock had been hit pretty decent, but they raised the forecast. I think that's huge. Their revenue growth is great. They're now from 70%, they're up to 72%. I mean, when you look across, that's the profit margin, excuse me. But when I look at the revenues as well, that continues to grow, specifically in the Atlas part of this company, which is over 60% of the capital that comes in on the revenue side. So when I look at that, I think there's a lot of reasons to suddenly start to get a little bit more interested in this company, John. I like what we're seeing. I like some of these numbers. I think after the hit that it's taken, there's real potential here for a stock to maybe make a nice bounce, a little bit of a rebound or something like that.
Yeah, I think so. I'm looking for MongoDB, with what they do, to be a stock that people look to pick up, not a stock that they look to throw out.
Right.
All right, last one, Prometheus Biosciences. This one is up over 170%, and it's a real company, folks, but they deal with a real problem. I remember, Pete, Kelsey Grammer's wife had irritable bowel syndrome. And most people don't talk about that very much, I guess, if they have it. But she was very vocal about it. That's the only reason I'd ever even heard of irritable bowel syndrome. And she was on Real Housewives back in the day. These guys had a very promising result for a treatment for that. And thus, instead of being a $40 stock, today it's nearly a $100 stock. Like I said, up 170%, Pete.
I don't know the last time I saw a stock do that, John. It's unbelievable. Here's the one thing where I'd say, hey, bring in the reins just a little bit. This is phase 2, folks. And anybody who follows the biotech world or the science world and different drugs and everything else, there's phase 1, that's the early stages. You get into phase 2, 3, and then you have to go and get the full permission. So we're not quite there yet. It's they have some great numbers that they're reporting, but this is phase 2. So just keep that in mind. I mean, this is a great move. This is great for anybody who's suffering from this disease. It's phenomenal. By the way, short squeeze, you think maybe a little bit, John? They got about 11 or 12, maybe 13% short interest in the stock as well. That's part of the squeeze that we're seeing to the upside today. But just be a little bit cautious knowing that this is phase 2. There's still a long ways before this is actually out there as a drug. So just understand that side of it as well.
Yep. I am a believer in companies that can actually cure things, Pete. And I'm also a believer in companies that create something for people that have had to struggle for a long time with something, because they'll spend almost any money to get whatever it is that will give them relief. So Prometheus Biosciences, RXDX, normal trade, 600,000 shares, traded 10 times that number, 6 million so far today, at more than double, because 100% would be double, folks. This one is up to $97.50 a share, basically up a little over $61. Wow. Mm-hmm. Hey, Pete, how was the Kelsey Ballerini episode last night that you were able to enjoy, because they plied you with booze and got you to pay for something at the Naples Wine Fest?
Yeah, it was well worth it, John. It was phenomenal. This was an unbelievable opportunity for a lot of folks. And we ended up having 40 people in the room, and it was fantastic down in Naples. And I drove all the way back, and now I'm going to go back over to Miami. Don't ask me why. But anyway, it was a great time. Kelsey Ballerini is absolutely wonderful person, and she did a great job. I mean, she went through a gazillion songs, including some songs that weren't hers that were great, and she has the perfect voice for some of those songs. So it was a great event. The folks that were there are unbelievable. Silver Oak sponsored it for the night, so we had as much Silver Oak, John, as you could possibly drink, and it was pretty good. I can vouch for that. And it was a really late night. It was supposed to be over around 10. I think we actually maybe got home and back in the sack around 1:30. So an unbelievable evening, and it went well. And again, great charity that's raised about $250 million in the last 20 years for the children of Collier County, which is phenomenal, because there's a lot of wealthy people there, and that's fine. There's nothing wrong with that. They work their tails off to get that. But there's also a huge population there that doesn't have anything. And this is helping those folks out as far as food, as far as clothes, as far as schooling, everything. So they do as much as they can with the money, and they make a heck of a lot of money, and it's all for a great cause.
Love to hear it. And again, applaud you, Pete, and all the generous people who bought cars, bought experiences, or just straight out gave money to that charity. So kudos to all of you. All right, I'm going to give you General Motors today as my unusual option activity. They were buying 10,000 of the January 39 calls with the stock at about 37.60. So people have hit a lot of the car makers. We talked about used cars and Carvana at the top of the show. But General Motors has a lot of cool vehicles. And maybe, Pete, since mortgage rates have come down for 4 weeks in a row, we might actually see some of the leasing rates for cars coming right down with it. And that would be good for General Motors, good for people that were priced out of the market at those higher rates. So 10,000 calls is 1 million share equivalent, just $1.50 above where General Motors is trading. You've got basically 5, almost 6 weeks to be in this trade. I like it. I decided to join them, Pete. What do you got?
I got GLD, John. I like this one because you're talking about the gold spider. So it's a great opportunity. Do you think gold is going to make a move even more so to the upside? November alone, John, it's going to run from 151 up to 165. So it's been on a pretty nice pace. Today with the stock or the ETF at 165.85, we had a pretty decent sized buyer, nice sized buyer, 17,000 calls they bought out in March, John, at the 140 or the 183 strike. Those were going for $1.42. They spread those. And what does that mean, folks? It means you're buying one and selling another, and you've got yourself into a position. We won't focus on that too much, but their whole trade is $1 for a $16 spread. So they're looking for something that could really rise to the upside, maybe capping it off just underneath $200 for GLD. Will that happen? We got plenty of time. They're going out to March. I like this trade a lot. It's one of those things where you're just looking, and you were just talking about something as well. You're looking to see what makes sense right now in the markets that we've got that potentially could play out. This one I thought made a lot of sense, that maybe we'll see a little bit of a revisit up towards 185, 190 maybe with the price of gold. We'll see. GLD's been up there before earlier in the year. Can it get up there again? Time will tell, but I really liked what we see today with that 17,000 they were buying, John.
Yep, that's a big buy. And I like it, Pete, because I was just on in LA yesterday on the radio on the Frank Motek show talking about how the demise, not complete collapse, but the demise, the hurt that Bitcoin and many of those cryptos have taken, even though they've somewhat stabilized now here, Pete, they are not viewed by as many people as an alternative to stocks or cash as they were at the beginning of the year. That makes sense, of course, because this time a year ago, Bitcoin was 60,000. Today it's 16,000 and change. So you can see why people may have soured on some of those cryptos. I think they'll come back, but certainly gold as a potential competitor. Bitcoin was the competitor to gold. Now they're perhaps migrating back towards GLD and gold. All right, Pete, what do we got as far as sports?
All right, we're going to start off with this one, John, and we'll just go back and forth on this one. I think it'll be a lot of fun to see what you think as well. So we'll start with the NFL. It's early. We're not saying it's for the entire year yet, but MVP. So who would you say right now for you, John, would be your MVP? I'll give you mine real quick. I'm going to say Justin Jefferson. So what does most valuable player really mean? To me, it doesn't mean that they have the best numbers. To me, it means their numbers are unbelievable, which they need to be, but what do they do for their team to make that team better and a winner? And I think that for me, it's Justin Jefferson. I think this guy is the reason the Minnesota Vikings only have 2 losses. I think, and if you go back, he's had almost flawless games for most of the year. He's had a couple where they haven't been able to get him the ball and he's underperformed. But I like Justin Jefferson, John. When you're a guy out there in this day and age and you are basically breaking records from Randy Moss, who I think is one of the greatest of all time, I think this guy is really special and he's really young and an under 25-year-old guy who's just absolutely spectacular. I think he's what drives the Minnesota Vikings. So who do you have for an MVP?
Believe it or not, Pete, I'm going to take 33-year-old Travis Kelce.
Oh,
or
nice.
Kelsey, depending how you want to pronounce it.
Yeah.
The guy is, nearly 1,000 yards of receiving for a tight end. He does play like a wide receiver. He's not afraid to go where tight ends usually go, but he also can flare down the field, as we both know. If he notices them sitting on him, Pete, he'll just make the fake like he's going to stop, and then he'll just keep going, and Mahomes will hit him with the ball frequently. And 12 touchdowns this year, 46 catches, average about 12 and a half yards a catch. We both saw him have a 4-touchdown game against the Raiders, but, it's the Raiders. He also had 3 touchdowns against the Chargers, and he's pretty much the go-to guy when they have first downs that they got to get. He will find a way to get open. So Travis, he'd be my man, Pete, for the MVP this year.
John, we'll just do a real quickie on two other things, though. How about for top defensive player and rookie of the year? I'll start with the top defensive player, and I'm going to say Nick Bosa. He leads the entire NFL in sacks. He's got 14 and a half. And oh, by the way, the San Francisco 49ers are the #1 defense in the NFL. I don't know how you beat that, but their points allowed is ridiculous in an offensive-minded NFL, and all the rules go to those guys, not us linebackers, John. The offensive guys get everything that they want. But I think he's really special. And I think Sauce Gardner, the cornerback for the Jets, who their defense is pretty much top 5 in just about every single category. I think it starts because of the fact that this guy, who was the 4th pick in the draft this year, is a shutdown corner, almost the likes of somebody like maybe even Deion Sanders or some of the other great corners. I think this kid's outrageous. 6'3", he's long, he's lean, and he's a rookie who people just don't throw the ball to his side of the field.
Well, Pete, I'd be remiss if I didn't throw this one out, and you're probably the only guy out there that knows it. But Jason Kels is actually an American football center for the Eagles. So when you see that name on the back of his jersey and you're kind of going, well, he played at Cincinnati, and he's been, I think, with Eagles, Pete, since 2011 or 2012, something like that. So there's some talent in that name, I guess. They've played pretty well to last that long. Both of them. One's, a little bit older than the other, but two really stud players.
Yeah, for sure. All right, John, how about Aaron Judge? Let's talk about him for just a second, because I'll tell you what, the Judge is taking the money, and he's got a Brinks truck that's following him around right now because of that contract that the New York Yankees were able to afford, and they can afford just about anything. As a position player, John, he's the highest salary ever with a $40 million per year price tag. Is it deserved? I'm going to say 100%. And this guy had the guts, John, a lot like we've seen in a couple guys in the NFL as well. But he had the guts to kind of just continue to play out his contract. Everybody said, well, are you worried about it? Do you need to sign? Do you need to do this? Do you need to do that? The answer is no. And he was rewarded for waiting and putting up numbers that are just unbelievable. So he's got his 9-year deal for $360 million. Oh, that doesn't sound so bad to me, John. What do you think about this deal? And it's one of the biggest of all time. It is the biggest for just a position player.
Yeah. And like you and I discussed before the show, Pete, Magic, 25 million, 25 years. Back in 1984. Think of that, folks. Now, there's an awful lot of players that would sit out a year if you insulted them by offering them 25 mil.
You're right.
I think it's going to look cheap going forward, Pete, but I'll tell you what's not cheap. It's based on the number of at-bats he had this year. If he has the same number of at-bats next year, $70,000 for every at-bat. Think of that, folks. That's how big that contract is.
It's unbelievable. The baseball money, John, is incredible. It's why they have to do 162 games, because they got to get that money rolling back into them. But it is unreal. It truly is. You're seeing it in the NFL. You see it in Major League Baseball. Even the NHL, we're seeing some of that money. Everybody's a little bit short of what they offered Ronaldo recently, John, at almost $750 million for 3 years. That's not such a bad deal for a guy who's over the hill. But nonetheless, money is out there in sports, and it's absolutely incredible.
Yep. Well, we will be back tomorrow, folks, from Miami, from our live trading event down in Miami. Pete and I will be there along with most of the team from the Rebels, the Rebel Pit, the Rebel Edge. We will be down there in Miami broadcasting tomorrow live at 1 p.m. Eastern Time. We hope you join us there. See you then.